Right now, sterling is locked in a battle with its 200-day simple moving average against the yen. For the first time in weeks, pound sterling to Japanese yen is hovering just above 211.75, the level that has defined the long-term trend for the pound-yen pair. Sellers are firmly in control. The pair has already sliced below the 100-day moving average, and now all eyes are on whether the 200-day SMA can hold a support or if we are about to witness a structural breakdown. Think of the 200-day as the market's memory of the larger trend. A close below it signals that the nearly year-long uptrend may be exhausted. As of today, Thursday the 6th of August, 2026, the price is clinging to this critical zone. The daily pivot sits near 172, but it is the 211.75 magnet that truly matters for the big picture. The pressure is mounting, and the next few sessions could decide the direction for the rest of the quarter. This sell-off did not happen in a vacuum. The Bank of Japan has held its policy steady, while fresh UK data has trimmed expectations for aggressive rate hikes from the Bank of England. The interest rate gap that once favored the pound is narrowing. On top of that, Tokyo keeps a watchful eye on the yen. Intervention risks still linger, especially after the Ministry of Finance drew its line in the sand earlier this summer. When the BOJ refuses to blink and the UK economic story softens, the natural result is a flow out of sterling and into the yen. The market is repricing the relative speed of policy normalization, and right now the advantage is tilting towards the yen. That is the fundamental wind pushing pound sterling to Japanese yen down towards the 200-day SMA. For anyone holding a long pound position, this is a deeply uncomfortable moment. The 200-day SMA is not just a line on a chart, it is a psychological barrier. A daily close below 211.75 would trigger stop losses and accelerate selling towards the 210 round number, and then on to 207 and 205, levels where bears have previously been seen booking profits. On the flip side, if the level holds, we could see a relief rally back towards the 100-day SMA, which is currently acting as resistance near 212.70. The range is tight, but the stakes are high. Institutional desks are watching the daily close obsessively. A false break and snap back would be just as significant as a clean breakdown. Right now, the data shows that sellers are retaining the initiative, but the support is alive, meaning we are in a rare moment of genuine technical uncertainty. Looking ahead, the path of least resistance remains lower as long as pound sterling to Japanese yen stays below the 100-day SMA. The immediate test is whether the 200-day SMA can absorb the selling pressure through the end of this week. A confirmed break below 211.75 would open the door to a swift move to 210, and that could happen within days. However, if buyers defend this level and we see a daily close above 212.50, the bearish momentum would stall, and a retest of the 213.30 level becomes likely. The key catalyst to watch for is any fresh commentary from Bank of England officials or a shift in risk appetite that could suddenly strengthen the yen. Until then, treat 211.75 as the great decider. The balance of risk is tilted to the downside, but the battlefield is exactly at the trend's make or break point. So here is the clear, memorable bottom line. Pound sterling to Japanese yen is teetering on its 200-day simple moving average at 211.75. The sellers are in charge, but that support has held so far. Your trading plan today must revolve around one simple question: will the daily close be above or below 211.75? If it holds, the trend survives. If it breaks, the pound yen could enter a new bearish chapter with targets at 210 and then 205. Keep a close eye on Tokyo and London headlines, because intervention talk or a repricing of rate expectations could tip the balance in an instant. This is not a time for guessing, it is a time for watching, waiting, and reacting to the close. Thanks for joining me. If you found this analysis useful, please like and subscribe for more real-time Forex insights.